Welcome to Talk Tickers. You're here for the essential insights from Ivanhoe Mines' latest earnings call.
And we're diving right in.
Let's cut straight to the chase. This quarter wasn't just good, it was record-breaking by pretty much every measure.
Absolutely. We saw Kamoa-Kakula achieve its highest ever quarterly revenue, $973 million. That's a significant 15% jump from the previous quarter.
A 15% jump, wow.
And that momentum flowed right through to their profitability, you know.
Exactly. They delivered a record $585 million in EBITDA. And impressively, they maintained a very healthy 60% margin while doing it.
That 60% margin is pretty solid.
And what's also notable, I think, is that the cost to produce their copper actually went down at Kamoa-Kakula.
That's right. Their cash costs, they dipped to $1.69 per pound of payable copper.
Okay.
Which puts them, right at the lower end of their own projections, their guidance.
Well, performing really well on costs, too.
Definitely. And all of this strong performance led to a net profit for Ivanhoe Mines that was up almost 40% quarter on quarter.
Nearly 40% higher net profit.
Yes.
That's significant. And it wasn't just Kamoa-Kakula carrying the weight, right?
No, exactly. Yeah. Both Kamoa-Kakula and their zinc operation, Kipushi, delivered record EBITDA contributions.
Right.
So it paints a picture of, broad strength across their assets.
It certainly does. And it's no surprise that management sounded very optimistic on the call.
Not at all. They basically said they believe their stock is in a good position right now. And they hinted that we might see more record-setting quarters to come.
More records. Okay, well, let's dig deeper then. Starting with Kamoa-Kakula. What fueled that really impressive performance?
Okay, Kamoa-Kakula. Well, on the production side, April was just a standout month. Over 50,000 tons of copper produced. 50,000
tons in 1 month. To put that in perspective, if they kept that pace up for a year.
Yeah, if they annualize that, you'd be looking at over 600,000 tons.
That's a serious amount of copper.
It really is. And what's also interesting is that their Phase 3 milling capacity, it was running more than 20% above its initial design.
So they're not just finding more ore, they're processing it extremely efficiently.
Exactly. Getting more out of the equipment they have. They also significantly boosted their imported power during the quarter.
Oh, yeah.
Doubled it, actually, from 50 megawatts up to 100.
Okay.
And they're planning for even more. This additional power, it's going to be critical for their upcoming smelter.
Right, the smelter. And they've been busy getting ready for that stockpiling concentrate.
Very busy. A massive amount, around 48,000 tons of copper sitting in concentrate inventory.
48,000 tons. So because of this buildup, the amount of copper they actually sold was less than what they produced this quarter.
That's an important detail, yeah.
Yeah.
Payable copper sold was lower than produced because of that inventory build.
Okay.
But the expectation is, as the smelter comes online and starts chewing through this inventory, their sales should catch up.
Right.
And potentially even exceed production in the later part of the year. Think of it like a temporary pause in sales before a big internal customer of their own smelter starts taking delivery.
That makes sense. So the strong profit growth at Kamoa-Kakula, it was definitely helped by higher copper prices.
For sure. Copper price was a big tailwind.
But it wasn't solely external factors, right? They also benefited from lower treatment and refining charges, the TCRCs.
Correct. Those charges came down, which helped the bottom line.
Now, when we talk about payable copper and these charges, just quickly, what does that mean for someone listening?
Good question. So payable copper is basically the amount of copper they actually get paid for after the refining process, takes out impurities.
Got it.
And treatment and refining charges, or TCRCs, those are the fees they pay to external smelters and refiners to turn their raw concentrate into that higher grade payable metal.
So lower charges mean more money stays with Ivanhoe.
Exactly. More of the revenue from each pound of copper flows directly to their bottom line. Simple as that.
Makes sense. They did mention some increased power costs, though.
They did, yeah. Power costs ticked up. But management highlighted that their team really focused on keeping other costs in check, cost containment, which helped to offset those increases. And here's a key takeaway. If they hadn't been building up that concentrate inventory, their profits at Kamoa-Kakula, their EBITDA, would have looked even better this quarter. Significantly better, actually.
So that unsold inventory represents potential profit just waiting to be unlocked by the smelter.
Precisely. It's profit sitting on the sidelines, waiting for the smelter to start up. Now, let's turn our attention to their zinc project, Kipushi.
Kipushi, right. That's now contributing positively to their overall profits, which is a good sign.
It is. It's in the black now. contributing to EBITDA. Although, they admit it's not yet performing at its peak, not at optimal levels.
And what's holding it back? Or what are the main factors there?
Well, what's particularly interesting about Kipushi is the biggest factor influencing their production costs right now. It's logistics.
Logistics, like getting the zinc concentrate out.
Exactly, getting it to market. Despite this being the biggest cost chunk, they've managed to keep these costs near the lower end of their guidance.
That's pretty good then, under the circumstances.
It is. And they anticipate that as they ramp up production, the costs associated with mining support and the actual processing, those should come down.
And they're working on fixing bottlenecks. Debottlenecking, they called it.
Yeah, putting a lot of effort into that. They're aiming to finish that up around October time.
Okay, and the big goal there?
The big goal is to get production consistently north of 250,000 tons of zinc per year.
250,000 tons. Why is that such a significant target?
Well, if they can hit that level consistently, Kipushi has the potential to become like a top 3 zinc producer globally.
Top 3 in the world.
Potentially, yes. That'll be a major achievement and would significantly elevate its contribution to Ivanhoe's overall financial performance.
Okay.
They're also actively working on ensuring a stable power supply for Kipushi. That's another piece.
Right. Power is always key.
Always. For the full year, their zinc production guidance is just over 200,000 tons. So there's clear upside potential once these improvements are fully implemented.
Got it. Now let's talk about what could be, well, a real game changer. The smelter startup.
Yes, the smelter. This feels like the big story right now.
It does. They're saying commissioning is almost done, and they expect it to really transform their financial results in the coming quarters. How so?
Well, first off, scale. This will be the largest copper smelter in Africa.
Yeah.
Capacity of 500,000 tons.
500,000 tons.
Producing a high-grade 99.7% anode product. Think of it this way. Right now, they're shipping concentrate, which is bulky, less refined.
Okay.
Once the smelter is running, they'll produce a more finished product, the anode. That has several key advantages.
Such as?
For starters, cost savings. Big time. They're projecting savings of over 50% on their logistics costs.
50%, just from shipping anodes instead of concentrate.
Exactly. Shipping anodes is significantly cheaper than shipping that bulkier concentrate. That alone will have a huge impact on their profitability.
Makes sense.
But it's not just about cost savings. The smelter will also produce a large amount of sulfuric acid as a byproduct.
Ah, yes, the acid. How much are we talking?
Up to 700,000 tons annually.
700,000 tons. And why is that important?
Well, as you probably know, sulfuric acid is a key input for other copper mining operations, especially for processing oxide ores.
Right. Used in leaching.
Exactly. And there's strong demand for it right there in the DRC's copper belt. Ivanhoe will now be a major local supplier.
So a whole new revenue stream, potentially?
A significant one, yes. They said they're already in advanced discussions to sell this acid, so that's looking promising.
Okay, cost savings, new acid revenue. Any other benefits to having their own smelter?
Yeah, a couple more. They anticipate some tax benefits, which always helps, and also a considerable reduction in their Scope 3 emissions.
Scope 3. Those are the indirect ones.
Right. Things like the emissions related to transporting their concentrate long distances. By processing it on site, they cut those down significantly.
Okay, so it's cost, revenue, tax, and environmental benefits. What's the timeline looking like?
They expect to start heating up the smelter this May, so very soon.
Right now, basically.
Pretty much. With the first feed of actual material, the concentrate, going in around July.
July, and then the ramp up.
They're aiming to reach 80% of its capacity within about 8 to 9 months after first feed.
That sounds pretty quick for a facility this size.
It's aggressive, yeah, but they seemed confident it's achievable.
Let's switch gears now and look at their broader plans for growth.
Okay, growth projects. They mentioned spending is on track, guidance unchanged there.
Correct. And they've been, selective about financing. They use project level funding where it made sense initially.
Right.
But now with stronger cash flows coming in, they're less reliant on that. Although they are considering a larger project finance facility specifically for the Phase 2 expansion at Platreef.
Okay, but overall, their financial health seems pretty solid.
Very robust, I'd say. A low level of debt relative to their earnings. That leverage ratio is low. They're targeting sort of 1 times through the cycle.
And cash.
Healthy cash position. $763 million on the balance sheet. So plenty of firepower to fund these ambitious growth plans.
Absolutely. Puts them in a strong position.
Now, one interesting near-term project they mentioned was Project 95 at Kamoa-Kakula, focused on improving copper recovery.
Yeah, Project 95, it's about enhancing recoveries, getting more copper out of the same amount of ore. How's that progressing?
How's it going?
It's already to 30% complete, they said. And it's expected to start adding over 30,000 tons of copper production annually, starting from Q1 next year.
30,000 extra tons.
And what's really compelling, is that this increase comes with minimal additional mining costs or significant capital investment.
So it drops straight to the bottom line, mostly.
Pretty much, yeah. It should directly boost their profitability and help keep Kamoa-Kakula's annual production consistently above that 600,000 ton mark.
Very nice. They're also working on further optimizing Phase 3 at Kamoa-Kakula itself, right? Pushing throughput.
Correct. Aiming to increase the amount of ore they can process, the throughput, up to 6.5 million tons per year for that phase, which targets a total site milling capacity of 17 million tons per year across all phases.
17 million tons. That sounds like a significant expansion.
It is, but they expect to achieve it with relatively moderate capital expenditure. They're leveraging their existing infrastructure effectively.
And longer term for Kamoa-Kakula Phase 4.
Looking further down the line, yeah, they're planning a Phase 4. It could potentially mirror the scale of Phase 3.
So another big step up.
Could be. This could push their annual copper production consistently over 700,000 tons, and in some years, potentially even exceed 800,000 tons.
800,000 tons of copper. That's world-class scale.
Absolutely top tier. They're also exploring the possibility of reprocessing their existing tailings.
The waste material.
Yeah, the leftover stuff from processing. Using that as an initial source of production for Phase 4. Again, trying to utilize existing infrastructure to keep costs down.
Smart. Okay, let's move south now to their Platreef project in South Africa. That's the PGM one, right?
That's the one. Platinum Group Metals PGMs. What's the latest there?
What's happening at Platreef?
Okay, Phase 1 concentrator startup. That's expected towards the end of this year.
End of 2024.
Yep. Initial capacity about 800,000 tons of ore milling per year. Then the Phase 2 expansion is still on track for 2027.
And the target for Phase 2?
Around 400,000 ounces of PGMs per year. Platinum, palladium, rhodium, gold.
400,000 ounces.
But their long-term vision, it's even bigger. There's a study underway to potentially triple their hoisting and processing capacity by 2030.
Triple.
Aiming for over 1 million ounces of PGMs annually.
1 million ounces. Wow. That would make it a monster PGM mine. For context, PGMs like platinum and palladium, they're valuable metals used in catalysts, electronics.
Crucial industrial metals, yeah. High value.
And they've also made good progress on the underground infrastructure at Platreef, the shafts.
Absolutely crucial work there. They expect shaft number 3 to be ready for hoisting ore in the first quarter of 2026.
Q1 2026.
That boosts their overall hoisting rate to 4 million tons per year. But even more significant is shaft number 2.
Shaft 2.
That one's the beast. It'll have a massive 8 million tons of ore and waste hoisting capacity per year.
8 million tons from one shaft.
Huge capacity. The equipment installation, the equipping is underway now. They also expect it to be operational in Q1 2026.
So both shaft 2 and 3 coming online around the same time.
Looks like it, yeah. Q1 26 is shaping up to be big for Platreef's infrastructure. Shaft 2 is really crucial for unlocking that long-term high-volume potential.
And underground development, are they reaching the ore?
They are. They've reached the ore body, what they call the reef, on the 850-meter level. And they're starting to ramp up development in some of the initial mining areas, the long-hole stopping sections.
Okay.
So this year, the focus is really on opening up more of the mine footprint, developing those ore reserves, getting everything ready for when that increased hoisting capacity comes online in 26.
Makes sense. Laying the groundwork. Finally, let's touch on their exploration efforts. They seem pretty active there, too.
Very active, particularly in the Western Forelands area near Kamoa-Kakula in the DRC. They've significantly increased the budget there for next year.
How much?
A substantial $50 million allocated for 2025. That's a 35% increase from this year.
35% increase. What will that fund?
A very ambitious drilling program. 102,000 meters planned.
Wow, that's a lot of drilling.
It is. And they're more than doubling the number of drill rigs they have operating there, up to 11 rigs as the dry season begins. They're focusing on some newly acquired exploration licenses.
And are we expecting any news soon from Western Forelands?
We are, actually. They anticipate releasing an interim update on the mineral resources there within the next few weeks.
Oh, okay.
And the expectation is that it'll show a significant increase in their resource estimates at key areas like Makoko, Makoko West, and Koko, based on the drilling they did through Q1.
So potential for resource growth there soon, but their exploration isn't just limited to the DRC, is it?
No, definitely not. They're spreading their wings. They've recently acquired a large exploration package in neighboring Zambia.
Zambia, how big?
Covers 7,750 square kilometers. And they're targeting similar geological formations to what they've found in the Western Forelands.
Interesting. Any advantages there?
Well, the fact that the Zambian government has already completed airborne geophysical surveys in this area gives Ivanhoe a valuable head start.
Yeah.
Helps them target their drilling better.
Got it. What about elsewhere?
They're also setting up an exploration camp in Angola. They hold a massive license area there, 22,000 square kilometers.
22,000. That's huge.
It is. And they plan to drill over 6,000 meters there this dry season.
Okay. DRC, Zambia, Angola, anywhere else?
One more, Kazakhstan. They expect to begin their initial exploration drilling program there around the middle of this year.
So a truly global exploration push. One last critical area to cover. Power. That's always a challenge in the DRC.
Absolutely. Power supply initiatives are key. They've made a big push to increase their reliance on hydropower, haven't they?
They have, yeah. Both local and imported.
Yes, they've significantly increased their imported hydropower capacity. They anticipate having a total of 220 megawatts of combined in-country and imported hydropower available soon.
220 megawatts. Is that enough?
Should be enough to power their operations, including the smelter, once it's fully ramped up.
Okay.
And the goal is to get there by the end of this year, which would, importantly, eliminate the need for those expensive diesel generators.
Getting off diesel would be a big cost saving too.
Huge. Yeah. Their total power demand with the smelter at full tilt, they're targeting to meet that entirely with hydropower by year end.
What about renewables? Solar.
They're looking at that too. They've committed to 2 solar power projects, 30 megawatts each.
So 60 megawatts total from solar. When?
Expected to be operational by mid-2026. They're also in discussions for further solar projects.
How does the cost compare?
Well, the initial cost per kilowatt hour for solar is a bit higher than the grid hydropower, maybe 15, 18 cents, including depreciation, they said.
Oh.
But importantly, it's significantly less than half the cost of running on diesel. And there's no upfront capital expenditure for Ivanhoe, as these are being developed by independent power producers.
So it's an OpEx rather than CapEx thing for them?
Exactly. And then there's the Inga 2 hydropower project upgrade. That's going to be a major contributor too.
Inga too, right? How much power from there?
Their allocation is expected to increase from an initial 71 megawatts up to a full 178 megawatts over time.
When do they expect the full amount?
The full 178 megawatts, they're hoping by October, November next year. There are ongoing upgrades to the power grid needed to support that transmission.
Okay.
And they stress they have contractual agreements in place with the power utility for this supply.
So it sounds like they have a multi-pronged approach to securing power.
They do. Their long-term view seems to be that these regional power constraints will be overcome through these various projects, which is, crucial for supporting the Congo's growth as a major copper producer.
Okay, that's a lot of detail. So let's pull back. From an investor's perspective, what are the key takeaways from this earnings call?
Right, boiling it down. Firstly, the numbers don't lie. Record revenue, record EBITDA, strong margins. It clearly demonstrates really strong operational execution, particularly at Kamoa-Kakula. And of course, they're benefiting from the current favorable copper price environment.
Okay, point 1, strong execution and prices.
Secondly, the imminent startup of their own smelter. That's a major, major catalyst.
Transformational, they called it.
It should be. It's expected to significantly boost their future financial performance by 1, drastically reducing logistics costs, and 2, creating those new revenue streams from sulfuric acid.
Okay, smelter's the big catalyst. What else?
Thirdly, growth. Their ongoing expansion projects across copper at Kamoa-Kakula, zinc at Kipushi, and PGMs at Platreef position them for really substantial production growth in the coming years.
Growth pipeline looks strong.
Fourthly, exploration upside. Those aggressive exploration programs in the Western Forelands, plus the new ventures in Zambia, Angola, Kazakhstan, they indicate a strong commitment to long-term resource development and, potential future growth beyond the current projects.
Don't forget the future pipeline.
Exactly. And finally, number 5, power. The progress they're making in securing a stable and increasing power supply helps to mitigate what has been a key operational risk that investors have definitely been watching closely.
Mitigating a key risk. Okay, that's a good summary.
Yeah, feels like those are the main points.
All right, now for our This Is Not Financial Advice segment. We like to float some, let's say, outrageous but plausible trade ideas based on what we've heard. What have you got?
Okay, here's one we're calling the acid rainmaker, or maybe just acid test is better.
Acid test. I like it. The idea.
Consider this: a long position in Ivanhoe Mines. Now, the market is probably hyper-focused, laser-focused on their copper production numbers and the smelter's copper output. Makes sense.
Standard focus?
But what if the market is underappreciating that massive 700,000 tons of sulfuric acid they're about to start producing every year?
The byproduct angle.
Exactly.
Yeah.
In a region, the Copper Belt, with a significant need for sulfuric acid for leaching operations and potentially limited local supply. This could be a surprisingly large and crucially underestimated revenue generator for Ivanhoe.
So the outrageous but plausible part is
That as these acid sales ramp up and start meaningfully contributing to the bottom line, maybe more than people expect, analysts might be forced to revise their overall revenue projections upwards.
triggering upgrades.
Right, offering a potential upside kicker that the market isn't fully pricing in right now because everyone's just looking at the copper. It's not just about copper. It's about capitalizing on this critical industrial byproduct in a very specific geographic context.
Interesting angle. Okay, what's trade idea number 2?
Let's call this one the Platte Reef Sleeper Cell, or maybe just Platte Reef Power Play.
Platte Reef Power Play, also long.
Also, long Ivanhoe Mines, yes. Again, Kamoa-Kakula's copper dominance rightly gets a ton of attention. It's the engine right now.
Understandably.
But let's not overlook Platte Reef's long-term potential. The potential to become one of the world's largest and lowest cost producers of platinum group metals, maybe by the end of this decade, 2030 or so.
The million-ounce potential we talked about.
Exactly. So the thesis here is that as that significant shaft infrastructure at Platte Reef Shafts 2 and 3 comes online in 2026, and production starts scaling up over the next few years, the market will eventually have to re-rate Ivanhoe Mines to properly reflect its substantial exposure to these highly valuable PGMs, platinum, palladium, rhodium, gold, in addition to its copper and zinc assets.
So it becomes a multi-commodity story in the market size, not just copper.
Precisely. This is definitely a longer-term play. It's a bet on Platte Reef unlocking significant value that might be currently overshadowed by the, very exciting near-term copper dynamics at Kamoa-Kakula.
A bet on diversification value being recognized later. Got it.
That's the idea. 2 different angles, both bullish, but for maybe underappreciated reasons.
Okay, great ideas. So to summarize this whole deep dive, Ivanhoe Mines has delivered a truly impressive record-setting quarter.
No doubt about it.
And they've laid out some very ambitious plans for future growth across their key projects, backed by really significant exploration efforts.
Yeah, the pipeline looks stacked. And their advancements in securing reliable power and, of course, the imminent launch of that massive smelter, these are critical milestones. They should have a substantial impact on performance moving forward.
And looking even further out, the potential from their exploration ventures across Africa and Central Asia offers considerable long-term upside possibility.
Definitely keeps the long-term story interesting.
Absolutely. Now remember, everyone listening, this discussion is for informational purposes only. Any investment decision should always be made after conducting your own thorough research and considering your individual risk tolerance.
Please do your own homework.
We really encourage you to dive deeper into Ivanhoe Mines financials and project updates yourself. And maybe a final thought to leave you with. How do you think their vertical integration, owning the smelter now, will impact their competitive position against other copper producers in the region over the long run? That's a key strategic question worth mulling over.